Hello, today we're gonna start with chapter 2. We're gonna learn how to record transactions in a journal. Then we're gonna post those entries to the ledger. Then we're gonna prepare the trial balance. Again, as we learned in chapter 1, what is the accounting equation? The accounting equation is assets equals liabilities plus equity. And as we said, equity has four main accounts. Two of them increase equity, which are capital and revenues, and two accounts decrease my equity, which are withdrawals and expenses. Now in chapter 2, we're gonna record the transactions that we analyze in chapter 1. How to record them? We're gonna go to the journal and we're gonna record them in debit and credit. So what does debit and credit means? Debit is the left side, credit is the right side. Okay, now as we did last time when we did the transaction analysis, when we were solving a question in chapter 1, we said, for example, if an asset account increased, okay, we're gonna go to this account and increase it, okay? But now if I want to increase an asset account, I will debit this account. And if an account under liabilities or equity increase, we're gonna credit this account. So assets increase in the debit side, while liabilities and equity increase in the credit side. So under equity, we said we have four accounts. Two of them increase equity, which are capital and revenues. So they will always be in the credit side. And two accounts decrease equity because they are negative. Okay, so they will always be in the debit side. The normal balance. Normal balance is the side in which the account increases. Okay, so again, for assets, we said they increase in the debit side. For liabilities and equity, they will increase in the credit side. Now for equity, we said we have four accounts. Two of them increase equity, which are capital and revenues. So they will be in the credit side. Two accounts decrease equity, so they will be in the debit side. So in chapter 2, you need to know this one. Okay, you need to know the normal balance, because you will not be able to journalize any transaction unless you know the normal balance for each account. So let's start with the transactions that we already know from chapter 1. Okay, let's do them again. For transaction 1, owner contribution, on November 1st, the e-learning company received 30,000 cash from Sheena Bright, and the business issued capital to her, which means the company received cash, so my cash increased from Sheena Bright, which is an investor or an owner in this company, and the business issued capital. So this is the second account affected in this transaction. So this is my accounting equation. Assets equals liabilities plus equity. Okay, cash is under assets and capital is under equity. Now, since I received cash, so the company received cash, so my cash increased. And also capital increased my equity because it's positive. So as you know, the normal balance for assets, it's debit side. Assets increase in the debit side, while liabilities and equity increase in the credit side. So cash increase, so it's gonna go to the debit side, to the left side, while capital will go to the credit side. So this is the journal. This one is the journal. Okay, we will always start with the debit account. So we said cash will be debited. So we're gonna start with cash. In the debit amount or in the debit column, I'm gonna write $30,000. Then in the second line, we need to leave a space for the credit account, which is capital. Bright is the owner name. So Bright capital and the amount in the credit side. Okay, so we cannot write cash and capital, okay, in the debit side. You need to leave a space to the credited account. Okay, after journalizing the transaction, we need to post these entries to the T accounts. T accounts, we call them general ledger. The general ledger is a book which includes all the T accounts for all the accounts used by this business. So for this transaction, only cash and capital are affected. So this is the T account for cash, this is debit, and this is credit. So since I debited 30,000, I'm gonna go to the debit side and write 30,000 and the date. For the capital, I'm gonna go to the credit side and write 30,000 and the date, which is November 1st. Hope that it's clear. Transaction 2. Purchase of land for cash. Smart Touch Learning purchases land for an office location, paying cash of 20,000. So again, we purchased land. Okay, so this is the first account affected, and I paid cash. Okay, so as you know, both are assets. So the accounting equation is assets equals liabilities plus equity. Under assets, I'm gonna write land and also cash. Now, I bought land, so my land increased. I paid cash, so my cash decreased. And again, assets increase in the debit side, while liabilities and equity increase in the credit side. Okay, so for this transaction, both are assets. Land increase, so land will be in the debit side. Cash decrease, so it will be in the credit side. Again, I'm writing the normal balance here. Okay, assets increase in the debit, liabilities and equity increase in the credit side. Because if it decreases, it's gonna be the opposite. So no need to know the decreases, just know the increases. So land increase, so it should be in the debit. So we start with land. Cash will be in the credit, so I'm gonna leave a space, then write cash. And we're gonna write the amount and the debit and credit, and here is the date. This is the journal entry. Here is the description, okay? I'm not gonna ask you to do it in the test. You just need to know it, okay? After the journal, we're gonna post the entry to the general ledger. So I'm gonna go to the T account of the land, and in the debit side, I'm gonna write 20,000. Then I'm gonna go to the T account for the cash, and I'm gonna credit the 20,000. Transaction 3, purchase of office supplies on account. As we said before, on account, it might be accounts payable or accounts receivable. If I'm gonna pay money later, it's gonna be accounts payable. If I'm gonna receive money later, it's gonna be accounts receivable. Smart Touch Learning buys 500 of office supplies on account on November 3rd. So we bought office supplies. So this is the first account affected. Did I pay cash? No, he said on account. I bought, okay? He said buys office supplies. So I'm gonna pay money later. So it's gonna be accounts payable. It's a liability account. So my accounting equation is assets equals liabilities plus equity. Under assets, we have office supplies. Then under liabilities, we have accounts payable. Now, buys office supplies, it means my supplies increased. And also my liabilities increased because I'm gonna pay money later, so I have more debts now. Okay? Again, what's the normal balance? For assets, it's debit side. And the normal balance for liabilities and equity is credit side. So supplies increased, so it's gonna go to the debit side. Accounts payable increased, so it's gonna go to the credit side. So in the journal, I'm gonna start with the debit account first. So I'm gonna write supplies first, office supplies. Then in the second line, I'm gonna leave a space for the account to be credited, which is accounts payable. And here you're gonna write the amount, which is 500. Then here is the date. Again, this is the description for this transaction. Transaction number 4, earning of service revenue for cash. Earning of service revenue means I provided the service, so it's earned. On November 8th, Smart Touch Learning collected cash of 5,500 for service revenue that the business earned by providing services for clients. So, collected cash. So this is the first account affected by this transaction. For service revenue that the business earned. Earned means I provided the service as he said here. So it's gonna be service revenue. So these are the two accounts affected by this transaction. Again, my accounting equation is assets equals liabilities plus equity. Cash is under assets. Service revenue is under equity. Okay. I collected cash, so my cash increased. And revenue will always increase my equity because it's positive. Now, the normal balance of the assets is debit side. Liabilities and equity increase in the credit side. So cash increased, so it's gonna go to the debit side. And service revenue increased my equity, so it's gonna go to the credit side. So in the journal, I'm gonna start with the debit first, which is cash. So we're gonna go to the journal, I'm gonna write cash. In the second line, I'm gonna leave a space, then I'm gonna write service revenue. 5,500 in the debit, 5,500 in the credit side. Now after the journal, we need to post those entries to the T account. Transaction 5, earning of service revenue on account. Again, on account means accounts payable if I'm gonna pay later, or accounts receivable if I'm gonna receive the money later. On November 10th, Smart Touch Learning performed services for clients for which the clients will pay the company later. The business earned 3,000 of service revenue on account. Earned means I provided the service, then I need to record service revenue. Now, I provided the service. Did I receive the money? No, not yet. So, I'm gonna receive the money later, which is accounts receivable. Now, what is the accounting equation? It is assets equals liabilities plus equity. Revenue is under equity and accounts receivable is under assets. Now, revenues will always increase equity. Now, I need to increase my accounts receivable because I just created this account for this customer. The normal balance for assets is debit side, while liabilities and equity increase on the credit side. So accounts receivable increased, so it's gonna go to the debit side, while revenue will go to the credit side. So on the debit side, it's gonna be accounts receivable. So I'm gonna start with accounts receivable, and the second line I'm gonna credit revenue. So I'm gonna leave a space, then I'm gonna write service revenue. The amount is 3,000 debit and credit, and here is the date. Now after journalizing, we need to post those entries to the T accounts in the general ledger. So for the accounts receivable T account, I'm gonna go and debit 3,000. For the service revenue, I'm gonna go and credit 3,000. Transaction 6. Payment of expenses with cash. Smart Touch Learning paid cash expenses on November 15th, 2,000 for office rent and employee salaries, 1,200. So as you can see here, we have two accounts for expenses: office rent expense, employee salaries expense. Both are paid in cash. So we have three accounts affected by this transaction. We said minimum will be two accounts affected by each transaction. So assets equals liabilities plus equity. Expenses are under equity. We have two expenses here, rent and salaries, and I paid cash, so cash is under assets. Now I paid cash, so my cash decreased. Expenses decrease equity. It's negative. It will always be negative. The normal balance for assets is debit. For liabilities and equity, it's credit. Cash decreased, so it's not gonna go to the debit, it's gonna go to the credit. Expenses decrease equity, so it's gonna go to the debit. The opposite of the normal balance. Okay, so since expenses will be in the debit, I'm gonna start with expenses. We have two expenses here. As you can see, I did not leave a space. Both are debited. Both are expenses. Rent expense 2,000, salaries expense 1,200, then cash on the credit side. So I'm gonna leave a space for the credited account, and the total will be 3,200, because total debit should equals your total credit for each transaction. Okay, then you're gonna go and post those entries to the T accounts. Transaction 7. Payment on account. On November 21st, Smart Touch Learning paid 300 on the accounts payable created in transaction 3. So I paid my debts. I paid, so my cash will go down. The second account affected is accounts payable. So I paid my debts. Okay. The accounting equation is assets equals liabilities plus equity. Cash is under assets and accounts payable is under liabilities. Now I paid cash, so my cash decreased. I paid my debts, so my debts also decreased. What's the normal balance? Assets increase and the debit, liabilities and equity increase and the credit. Now cash decreased, so it's gonna go to the credit. Accounts payable also decreased, so it's gonna go to the debit side. So we always start with the debit account. This is a rule. So I'm gonna start with the accounts payable, then in the second line I'm gonna leave a space, then I'm gonna write cash 300. Then you're gonna go to the T accounts for the accounts payable and for the cash, and you need to post these 300. To be continued. Thank you for watching. If you have any question, please leave a comment. Please like, share and subscribe.